Hello everyone, it's me, NYSEinstein from the floor of the New York Stock Exchange, inside Wirtschaft, Dow Jones Industrial Average, closing out the week. Option expiration, May 18th, 24,715. Russell up an odd lot, spiders down an odd lot. Volume reasonable. What in God's name happened this week? We've seen ups and downs and a lot of stuff, a lot of earnings coming out. At the end of the day, there's a lot of significant stuff. It was a very constructive week. You look at the week and go, you know what, there were some anemic days, a couple of upward big ones, a couple of down big ones, a lot of economic data on the table. At the end of the day, we've got some really interesting analysis to make on what the market did. The Russell closed 2 days in a row at record highs. Transport's hitting up against resistance. Interest rate, okay, so we had economic data that came out that was positive economic data as far as retail and manufacturing going. That caused the 10-year yield to spike to a record high since 2011. That's a big deal. That forces a trigger into sell equities and buy bonds. But at the end of the day, so that was your negative day. Then the next day they reinterpreted it and just said, you know, let's not focus on the bond yield sort of leveled out around 308, 306. Okay, that sort of keyed into what's positive about this economic data. Just retail and manufacturing were up, and the market engaged that and went back up. At the end of the day, we're seeing that normally in an environment where interest rates are going to rise, the Russell tends to actually sell off, not rally, and that's when interest rates were much higher. At an interest rate level where it is today, actually we're seeing that there's positive value in people aren't buying the Dow as much in this spike in the yield. They're actually buying the mid cap and the small cap. So in a low interest rate environment overall that is slowly rising, positive economic data and potential inflation is actually causing people to invest in the Russell and spike that up as high as it's been. Records. That's super interesting. That's an economic fact. So even though we are slightly inflationary, even though there is positive economic data, the market itself, which normally when in a fragile mode would be selling off on all these big high spike yield 10-year bond triggers, are actually absorbing it, and that's a positive thing. That shows that the market is long-term growing. That is positive, and even though the market's going to be able to absorb a rising interest rate on a slow level. It's not, we're still low, guys. If you're a 30-year-old person, this is a high level for you as far as interest rate goes. But if you're a 50 and 6-year-old person, you saw interest rates as high as 16, 17, 18%. So at the end of the day, this is all positive. It is super constructive, and the market's absorbing all the economic data that's coming out, though inflationary. All that being said, the week ended up okay. We're 24/7. Dow is up an odd lot. That's insignificant. Russell spiking up to a 2-day record close. SPY's reasonable, off a little bit. Gold finally popped a little bit, and oil and the energy sector, though weak today, along with JP Morgan, has been on the rise all week long, and that's super positive. All that being said, I'm done. This week felt like a month. All good here. All good here. NYSEinstein, inside Wirtschaft from the floor of the New York Stock Exchange. I'm out for today. I'll see you Monday.